You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tosaw from St. Charles Wealth Management, along with Mark the Greasy Meatball Sebastian and Andrew the Rock Lobster Giovinazzi from OptionPit.com. If you trade options, you want to be smart about every decision. So why not choose the smartest platform for your trades? At Public.com, you can view upcoming earnings dates directly in the options chain. You can queue and execute multiple orders simultaneously. Easily view contract performance over time. And if you have a question about any stock, you can ask Alpha, their AI for investors. But want to know the smartest part of trading options on Public? Earning rebates on every single contract traded. No other platform provides options trading rebates, and they reduce your trading costs to less than $0 per trade. So, make the smart move and switch to Public.com, the only options trading platform where you can earn rebates on every single contract traded. Paid for by Public Investing. Options not suitable for all investors and carry significant risk. Full disclosures in podcast description. And now, get ready to hit the Option Block.
All right, everybody. That music means we are back, ready to rock out for another week of options action here on the old network. My name, of course, Mark Longo from theoptionsinsider.com, as well as from the aforementioned network. Hope you had a great weekend. Hope you're relaxed. You're ready. You're raring to go for a little bit of options tinged fun. Of course, we kick things off with the old OB, your bi-weekly source for all things options related. And if you like what you hear, this show, anything else on the network, remember, it is a full network at the end of the day. Throw a like, a star, a comment, a rating, a review, all that stuff in aggregate on all the different platforms, all lumped together, helps new people continue to discover the content. And of course, if you want to discover more fun, more content in your lives, you want awesome pro Q&As, you want options oddities, you want, man, the clock is ticking. Coming up on the July Pro Trading Crate giveaway. Only one place to get access to all those goodies and much more. TheOptionsInsider.com/pro, P-R-O, or for you cool kids, /secret club. That also works, but don't tell anybody about that one. That's the secret one. All that gets you access to, as the Rock Lobster says, the good goodies. Speaking of the Rock Lobster, Mr. Andrew Giovinazzi from OptionPit.com. We are joined by him as well as by the uncleist of Mike's. Yes, he's back from his world tour celebrating his IC belt win last week. He had to take Thursday off. He was so excited. But now he's back. Mr. Uncle Mike Tosaw from St. Charles Wealth Management. I introduced them both because, listeners, it is time to commence our broadcast week with a little bit of fun. It is time for our 80s Trivia Challenge. Here we go. All right, listeners. Fun one this week. I hope you had a good weekend. I had fun. I went back to a big summer movie for the first time in a while. Can't remember when we all sat down to a big summer Marvel tentpole extravaganza. They had one this week, R-rated, which is going to leave out some of the kiddos, I know. But a fun one nonetheless. Of course, talking about Deadpool and Wolverine. We had a fun poll over the week. I said, anybody else taking a little break for a little bit of a Deadpool action? And yes, ultraviolence for me, 38.5%. Got a tie, actually. Not my cup of tea, 38.5%. Also, hey, nothing wrong with that. And you're too busy. You're so focused on trading. You're waiting all weekend for the opening bell, 23.1%. So we got some hardcores out there. No time for fun. Waiting for that opening bell, which leads us to our trivia question today. And this is where we normally do 80s themed trivia. But I dug for some fun 80s themed trivia, especially around these two characters, Deadpool and Wolverine, because they are the talk of the town right now. And unfortunately, neither of these characters first appeared in the 80s. So we're going to go a little bit beyond it. We're going to have fun. We're going to guess both of their origins. No need to buzz just yet, gentlemen, because I am going to choose this one because it's going to be a little bit different. So we have both Wolverine and Deadpool. I just gave you your first clue. Neither of them had their first appearance in the comics in the 80s. They were both, I would say, reasonably close to the 80s, but neither of them were in the 80s. Wolverine came first. Deadpool came after the 80s. Because he's losing so badly, I will go to the Rock Lobster first. Because he's chiming in already. He buzzed, even though he's buzzing about the sound. Mr. Rock Lobster, I will give you first crack before Uncle Mike. What year did Wolverine first appear in the comics, sir? Pick a year.
Oh, I'm going to say 1993.
I just said he was before the 80s, but you were not listening. So
before the 80s.
He was before the 80s. Yes, Wolverine was already well established in the 80s by the time the comic books rolled around. He was a big deal in the 80s.
I couldn't even get being the first one right.
All right, Mr. Uncle Mike, can you steal? What year did Wolverine appear in the comics first? Hint, before the 80s.
I'll go with 1977.
A good guess, an excellent guess. Actually, 1974, October of 1974. He debuted against the Hulk. And actually an awesome...
Scarily close.
Yes, an awesome comic. I recommend everyone... They kind of jokingly refer to it a little bit in the Wolverine Deadpool movie. That is his first appearance. He is actually fighting the Hulk in the forests of Canada. It's a pretty cool little story. Go check it out if you have not seen it anyway. Just a old school Wolverine just as a monster, which is fun. All right, let's flip the scripts. Mr. Uncle Mike, you get to go first this time. Deadpool debuted after the 80s. What year did Deadpool make his first appearance?
Well, I'll go with 1993.
An excellent guess. Also incorrect. Mr. Rock Lobster, can you steal? What year? You just said 1993 for Wolverine before, so two guesses were 93 now. A hint, it is not 1993. What year did Deadpool make his first appearance?
I'm gonna push a little closer. I'm feeling 97.
No, it's the other way. 1991, February of 1991.
Oh, jeez. All right. Yeah.
This was a little more challenging this week. I wanted to kind of mix it up. I thought maybe Deadpool would have had his origins in the 80s, but no, 1991. Just missed it. And Wolverine kind of missing it on the other end as well, 1974. No points this week, listeners. Did you guess either of those? Did you go see Deadpool and Wolverine? Kind of a fun one. Again, not a romp for the whole family, definitely. But if you're down for a little bit of the old school ultra-violence, as they say, by all means. An intriguing run through the theaters as we keep on rolling right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the trading block.
All right, everybody, welcome to the trading block, the portion of the show where we tell you, surprise, surprise, what the heck is trading? Things are popping out of the gate. An interesting day. Getting back to Deadpool and Wolverine really quickly. Obviously, the success of that. Also, maybe the looming prospects of the return of Iron Man / now Doctor Doom. Popping Disney up $2.50 or a little over, almost 3% right now. So there is some trading impact to all of this at the end of the day. But yeah, a fun abounding out there. Is it fun in the markets? It's kind of a weird start to the week. Haven't they all been lately, though, listeners? We didn't have the tumultuous events over the weekend that we had last weekend. So that made things a little bit maybe saner to start the week. Nonetheless, we still had just an intriguing kickoff to the day here with everything kind of kind of rallying first. We got a little bit of a V out there for most of the major indices. We rallied in the S&P, then we got spooked, and we sold off. S&P selling off down to right before showtime, not that long before it, to about close to 54.5, kind of bounced off that level, and then rallying back up to where we are right now, up nearly 27 handles, right around 54.86, up about 0.5%. The NASDAQ up almost 0.75%, over 100 handles, and the Dow up 0.13%, only a whopping 52 handles out there. And let's not forget our friends small caps out there. What are they up to today? If I can get the right quote. There we go. Off a full percent, because why not? They're going to do their own thing. Today, they are doing their thing to the downside. All of this noise means VIX is pretty much unched on the day, kicking off the show right around a 1640 in VIX cash. Puts it down 1/3 of a point from where it was on the Friday show. We all know we did a lot of living, though, over the course of the last week. We got up to nearly a 20 handle, I think 19 1/3, somewhere in that range. So we're almost 3 points exactly below that level. So a frothy week, even if net show to show doesn't show like a lot of movement. VVIX still pretty frothy as well at a 95, even though it's down 5 points from the Thursday show. We hit almost a 110 last week, 109, right before showtime there. So we're off those highs as well. All right, around the horn we go. No winners, so I guess I'll just choose. Let's go to Uncle Mike first. Why not? Mr. Uncle Mike, sir, what is catching your eye out there in the markets today?
Well, a couple things. It appears that 54.50 in the SPX over the course of today and last Friday, it's not, I wouldn't call it a key number, but I would call it a key area. Towards the close on Friday, it looks like we tested it 3 times in the last hour. And today, it looks like in that V-shaped bottom that we had, we did get down to 54.44, but it wasn't for very long. And so that's why I say it's appearing, at least for these 2 days, to be a key area. Not a key number, but a key area, so to speak. In terms of some things that are lighting up my tape for today, well, of course, I'm loving it from McDonald's. McDonald's is actually up 4.5% on the day, so we're getting a big move there. You had mentioned Disney with a 2% move on the day as well, so we're seeing that. Also, Tesla's up 6% on the day, up $13. And on my screen, those are probably the biggest movers with which I'm seeing right now. Overall, in the market in and of itself, S&P is up minimal on the day today. I shouldn't say minimal. It's 20 points. 20 points is still 20 points. So shouldn't minimize that by any means. Bonds are really not getting too much movement today. Silver's continuing to sell off. It's going to be interesting to see if this rally in silver over the last couple months was just all a big fake out, or if it is right now gathering some steam for a bigger move. So that's another thing with which I am watching. In terms of the names with which we have in our covered call portfolio, nothing major of movement. Time decay continues to do its thing, which we like. And we are excited about that as always. Every day that you don't blow out your account, it's another day of theta in your favor. That's kind of the way that I like to look at it anyway when you're selling premium. So overall in the day, it looked like it had the makings for something not so good, because initially up till in the first half hour, we did rally, but we rallied to the point of our highs on Friday. And then we sold off to our sort of the final hour of the day lows on Friday. So it just doesn't look like this market knows what it wants to do yet. But I like the fact that it doesn't know what it wants to do when it's 20 points up instead of 90 points down.
Who's buying McDonald's these days? I'm not buying McDonald's until they bring back all-day breakfast. Then you can rally that stock. Then that stock should be triple the value. But until then, pshaw to McDonald's, Mr. Uncle Mike. So who would buy such a stock? No all-day breakfast. No all-day breakfast. I am out. All right, Mr. Rock Lobster. Same question for you, sir. Kind of a tumultuous start to the trading week. What is catching your eye out there, sir?
Well, one thing that I noticed from last week to this week is last Friday's VIX curve was the same as the VIX curve of the week before. Literally, shape didn't change. VIX cash didn't change very much. So after all the action of the last 2 weeks, the VIX curve didn't change from week to week marketably, and today another day goes by and the curve is relatively the same, although all of the VIX futures are a little bit lower. So whatever the market is waiting for is still here. It's still kind of baked in the beans, so to speak. So we have Microsoft, Apple, Meta, Amazon earnings this week. We have the Fed probably telling everybody we're not going to do anything with inflation quite yet because we still had those hotter PCE numbers last week. Again, they weren't super hot, but they were a little higher than everybody wanted or was expected. So unless they lower rates for a political reason, they're likely not to do it for an economic one. So the market, I believe, is still waiting, right? And can Apple pull another rabbit out of the hat with another earnings cycle? Remember, they finally figured the way to whisper AI properly about a month ago when they had that crazy rally. And, and what do the rest of, I think Microsoft could end up doing pretty well this quarter. So we need something bright and shiny, and I think volatility is holding up because of that. There is potentially a little election juice, but short term, I think between the earnings and the Fed, that is what has been getting volatility higher this year. And I don't think that is going to change because like the big thing is like, why does vol stay higher? Well, SPX can get right back up to 5,500 in a, 2 shakes of a lamb's tail. So it's not hard to get back up there. So anyway, I don't think any of that has changed, but I think we'll have a little clearer picture at the end of the week. And then, of course, from that point on, with most of the earnings, the next catalyst will be NVIDIA earnings. And then, potentially the Democratic National Convention, we'll see. But it appears again that it's going to be a Trump-Harris race, at least for right now. But if anything, don't expect the unexpected in this current presidential election.
Let's see what we can expect out there in the markets this week. Let's start in the major indices and work our way down, shall we, listeners? And, lately the whipsaw has been delivering on the volume front. Is that the case again today? The answer is yeah. Yeah, we're seeing some decent paper out there. Not explosive, but not nothing either. VIX, 600,000 contracts on the tape already, so pretty active. Looks like the big dog out there right now are 42,000 of the AUG 16 puts, followed by 24, almost 25,000 of the NOV 47 halves, and about 25,000 of the NOV doubles. So those are both opening, so maybe some NOV vertical action, which is kind of interesting. The fact that it would start at the 47 half, also kind of interesting. Also, you have 23,000 of the NOV 75s going up out there today. So it looks like there's some funk afoot out there in VIX land. All of that accumulating to 600,000 contracts exactly on the tape right now. SPY coming in pretty hot as well. Usually we expect around 4.35 million. Add a million to that right now. 5.36 million on the tape for SPY. So looking pretty robust out there in SPY land. The ADV 7.65 seems like we're going to hit that today. The S 1.6 million. So weirdly enough, the S actually kind of below where we expect it to be this time of day. Usually expect the S to be at 1.7 million or 1.75 million, somewhere in that range. A 1.6, so slightly low for the S. The ADV 3.17 million. So again, kind of showing you SPY and the S not always moving in lockstep from a volume perspective. Small caps, though, once again, lighten up the tape. 1.41 million contracts on the tape for small caps. The ADV almost 2 million, 1.96 million. So certainly seem like they're on pace to hit that and indeed go beyond. It wasn't that long ago we were saying 1 million contracts a day is kind of unsustainable for small caps. And now here we are, almost 2 million. So, man, the worm turning out there in small caps, at least from a volume perspective. And the Qs pretty much exactly where we expect them right now. We expect them right around 2.25 million. That's pretty much exactly where they are right now. The ADV almost 4 million, 3.96 million. So we'll see if they could make up the rest in the second half of the session. As we keep on rolling out to single names, you know, earnings season hot and heavy. I heard someone added up that it's around 10 trillion worth of market cap that is announcing this week. So we got some bangers coming up this week. Is that driving a lot of single name paper? The answer, at least for right now, is no. People are keeping their powder dry, I think, ahead of some of these big names. Number 10 cost you only 152,000 contracts to break into the top 10. Those are kind of sleepy dog days of summer numbers. And again, we are heading into that time of the year, so maybe seasonally this is not surprising. That gets us to our old friend Palantir, just barely clinging to its spot in the top 10 today. Pretty much unched right now, right around 27.15. Again, good for number 10. 152,000 contracts. Number 9, out to crypto land, Uncle Mike's favorite place. It's Mara. 156,000 contracts on the tape for them. 20 3/4 is where it's trading, off about 80 cents or nearly 4%. Of course, we had the big ETH ETFs listing recently, so that's driving a lot of action out in the crypto space. We'll get to all of that in a little bit on the crypto rundown coming up after this show, listeners. Number 9, Mara, 156,000 contracts. Number 8, the Amazonians also coming in light today, only 162,000 contracts on the tape. They're at 184.13 right now, up $1.63, or nearly a full percent. So a little pop out there for the Amazonians. Probably one of the reasons the Dow is managing to stay green right now. That and a little bit of Diz love. Amazon, number 8, 162. Number 7, we've got Pfizer, 179,000 contracts, $30.82, up about a nickel. So kind of unched for Pfizer right now. Let's see, do they have a banger range today? No, only about a 43-cent range. So not like they're lighting the world on fire. By the way, putting up some numbers today, 179,000 contracts. This is really quickly. Let's just see. Let's see what Pfizer is up to. Earnings are tomorrow before they open. So there we go. That's what's driving the paper out in Pfizer land. Number 7, 179,000 contracts. Number 6, yeah, the piece of crap known as Ford. $11 even, off 19 cents right now. I could say that because I have some Ford. And we talked about what we were going to do with Ford, overwriting it to the upside. All that fun. Check out Options Oddities on the Pro if you want to hear more about that. The saga that has been Ford of late. 183,000 contracts on the tape for Ford. Number 6, you know it's sleepy town when Pfizer and Ford are making it into our top 10 out there, listeners. Number 5, we got AMD, 301,000 contracts, 141.40, up $1.40, so exactly 1% move for them. Number 5, 301,000 contracts. Number 4, it's the fruit company, Apple, 218.92, up 96 cents, or about almost 0.5% out there. Even though they announced they're delaying their AI. When you delay AI, shouldn't you sell off the 20% that you gained because you mentioned those magic letters? They sold off a little bit this morning. They got down to about 215 3/4 actually, so fully $3 below where they are right now. And then just gobbled it all back right as we kicked off the show, pretty much, just rallying about $3. So you had a nice intraday swing already in Apple. All of it not amounting to a lot of volume, only 319,000 contracts, and the number 4 spot. Number 3, it's SoFi. SoFi sneaking its way into the upper echelon of the top 10. 386,000 contracts. Again, 386 get you all the way to number 3, really. That usually should get you to number 8, maybe. Number 3, SoFi. Not exactly lighting the world on fire with volume, but good enough for number 3 today. 728, off about 13 cents. Let's see, do they have a banger range? No, they had about a 28-cent range out there for SoFi. So intriguing stuff on the tape here for our old pal SoFi. Number 3, 386,000 contracts. Also popping off before the bell tomorrow. Clearly that's accounting for some of this. Number 2, it's Tesla, because you know it is. 1.5 million contracts on the tape. 232 3/4, up nearly $13 or 6%. I guess the Tesla trade is on again. Morgan Stanley says they're a top pick. The back and forth on this name, it'd give you whiplash. Where was Morgan Stanley a week ago when it was way cheaper? I don't know. Crazy. Gotta love the analysts. Number 2, 1.5 million contracts for Tesla. And number 1, you know what it is. Maybe you love it. Maybe you hate it. It's NVIDIA. 112 and about a half, off about $0.50. Not even 0.5%. 1.9 million contracts. A fairly sleepy day. That'd be banger volume for any other name. Sleepy day for Mr. NVIDIA out here today. Like I said, we are in it. Earnings season, hot and heavy. Mickey D's today, as Uncle Mike said. Don't call me till they bring back all-day breakfast. Then I'm in on Mickey D's again. Phillips, Tilray today. Tomorrow, SoFi. We were just talking about them. PayPal, Pfizer. Just talking about them as well. P&G, Merck, JetBlue, AMD. You may have heard of them. Microsoft, you may have heard of them. A good old SBUX, EA, so the gaming side, and a Match Group, a.k.a. the owners of all online love. If you want to engage in online love, you must go through Match Group, unless you are Bumble. That's it. Wednesday, Boeing. Our friends used to be across the street. I forgot where they moved to now. A Wingstop, MasterCard, Meta, may have heard of them as well, and Qualcomm. Thursday, Moderna, CROX, so rubber shoe vol. We'll find out what it is on Thursday. The Amazonians and the Apples, so two big A-tech names. My old stomping ground, Intel, a little bit of Coinbase, Uncle Mike's biggest holding, I do believe. DraftKings, Roku, haven't heard about them in a while. Marathon Oil, good old Mara, just talking about them. Snap, and then Friday we've got Exxon and Chevron. So a banger week. Uncle Mike just talking about good old Mickey D's out there. They were popping off before the bell. They went into their announcement $252 exactly. And because we like you folks, hot off the presses from our friends over there at Orats, we have some new updated, fresh earnings move results, and earnings season reports. They're pricing in 3.5%, and as of this report, they had delivered 4.1%. That has increased to 4.3%. So they are mildly outperforming their earnings straddle, I would say, all things considered out there. Let's see what else we have in store for us, listeners, on these reports. Unless you're really excited about On Semiconductor, somebody is. They're popping $8.50 right now. It's trading 78 3/4, up 12%. They were pricing in 8.1%. They're outperforming that right now. So On popping hard out there, listeners. We have a lot of names coming up this week. Luckily for you, we have all of them literally broken down for you on these earnings move reports. Because we like you folks, we could literally spend hours going through all of these. Let's pick out a few. Let's go to AMD, 30th after the bell, trading almost exactly 140 when we ran this report earlier this morning. They're pricing in $11.45. In the past, they moved $8.78. So yeah, spoiler alert, more juice on the table for AMD. Let's see who else we've got here. EA Sports, it's in the game. July 30th after the bell, 145.18 is where they were trading. They're pricing in $7.34. In the past, they moved 5 3/4. So extra juice for them. Softy, the Rock Lobster, and Uncle Mike, I believe, both intrigued by Softy. 425 1/4 is where they were trading when we ran this report. They were pricing in, get this, $20.37. In the past, they've moved $16.15. So that's a fair amount of extra juice. My goodness, listeners. Wow. Intriguing stuff. $4.22 worth of extra juice. Pretty much 25%. Is that merited? I guess we'll find out. Match Group, Online Love. Is that where the juice is? 33 1/4 is where they were trading. They were pricing in 2 2/3. In the past, they moved $2 even. So extra juice for Online Love as well. Let's go to overpriced coffee. Let's go to Starbucks. 74 even. I can hear the Starbucks fans groaning in the audience. It's fine, but I think we all can agree it's overpriced. $5.19 is what they were pricing in. In the past, they moved $4.55. So extra juice for the Bucks. Maybe you're getting the juice in one of those dragon fruit refreshers. Those are pretty good. Overpriced as well, but pretty darn good, those things. Boeing, our friends across the street. One, it used to be anyway, 186.90 is where they were trading. They were pricing in about $9. In the past, they moved $7.34. Boeing, of course, has outperformed of late, usually to the downside. I mean, outperformed from a vol perspective, obviously, listeners. And yeah, obviously, maybe some folks pricing in a little bit of disaster premium there as well. Any other hot, man, there's so many here, listeners. I think we can probably skip Wingstop. Meta, here we go. 31st after the bell, 465.70. They were, oh my goodness. This is interesting. I need to check this further. They were pricing in $38.53. In the past, they've moved 61 1/4. So maybe the last few cycles are really aberrant outliers, or they're pricing in nearly a 50% discount in Meta juice. That seems odd to me. I need to go dig in a little bit. This has a 30-day implied of 50 pretty much exactly for Meta. That, Meta, 50% haircut on vol? I don't know, might be a deal. If that's the case, I need to go look further into that. Maybe chat with the folks at ORAT, see what's causing that number. Qualcomm, 180. They're popping off 31st after the bell. They've moved $12 in the past. Now they're pricing in nearly 13.86. So nearly $2 worth of extra juice. So they've got the script for this cycle. Rubber shoes, are they delivering more vol? First, before the bell, 130, pretty much even is where they were trading. They're pricing in 12 1/3. In the past, they've moved $13 even. So less juice for rubber shoes. You know what, the hell with them. If they're not going to play along with the rest of them, then they can just get the heck out of Dodge. Moderna, first before the bell, 122, pretty much even is where they were trading. They're pricing in 10.29. In the past, they moved about $10. So a little bit, a dash, a sprinkling of extra juice on top here, listeners. Let's get a couple more in. Let's go to some big A-Tech names. Apple, first after the bell. 218 is where they were trading when we ran this report. They're pricing in $9.07. In the past, they moved $7.90. So yeah, extra juice for Apple. I think you can see, given how much has moved even since his last announcement, probably merited that they're sprinkling on a little bit extra juice. In this case, $1.17 worth of extra juice. Is that merited? Up to you. Amazon, same day, 182.5. They're pricing in $12.65. In the past, they moved $14.01. So Amazon taking about $1.35, $1.36 off the top. Interesting. They did not get the memo. Is that the way to go for the Amazonians? Intriguing. Let's do one more here, then we got to get out of here. Coinbase, first after the bell, 243 is pretty much where they were trading. They were pricing in about $22, so pretty juicy. In the past, they have moved $17.86. So yeah, they're pricing in some extra juice. $4.10 more than they've moved in the past. So yeah, that's some juice out there, listeners. That's just literally scratching the surface. We have DraftKings, we have Mara, we have just about every name you could possibly imagine that is popping off this week. Roku, Square, Snap, all of them, and many more. TheOptionsInsider.com is the place to go to get all that access because we like you folks. The season right now hanging out at a whopping, my goodness, this is just, the technical term for this is bonkers. 146% is where our season is hanging out right now. So little wonder why so many names are tacking on extra juice outside of the Amazonians. My goodness. Last week, I should say, came in at 155%. I'll have to go look. That might be the most quote-unquote banger week we have ever seen since we've been crunching these numbers. And we've been doing it for a while. My goodness. That's some juice, listeners. In the meantime, let's see what other juice we can find. It's time to get odd. It is time for the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the odd block.
All right, listeners, let's get weird. Let's get wild. Maybe we'll get a little bit whimsical. What do you say, listeners? I mentioned at the top of the show, it's a hefty index day. Not exactly a banger single name day. We shall do what we can to find some fun, as the Rock Lobster says, good goodies for you folks. Let's go out to Designer Brands Inc. first, ticker symbol DBI. They sell designer and name brand shoes, and they own DSW. They own Designer Shoe Warehouse. That's them. All right, $7.75 off about a dime today. It's not exactly a banger day for them. A good year for them as well? No, not at all. Off 22% or $2.20. So as you can guess by that math, they were about $10 a year ago. They rallied up to their high of about $13.50. Looks like they hit it a couple of times or threatened it a couple of times, including in October and then again in early December. And then they've tried to rally it a few times since. In March, they got up to $11.50. In May, they got up to $11. Every time looks like it's been a lower high, and then they sell off aggressively. And the latest sell-off, they got down to $6.30. That was just a few weeks ago. That was July 3rd. And July 2nd. So, yeah, it's been an intriguing month for them. So I guess if you want to look glass half full, They're up $1.06 or nearly 16% in this past month. So there you go. A little dose of optimism for you folks out there who are always searching for some. And what do we find out here, listeners? Looks like somebody thinks that partay, perhaps, shall be continuing. Let's find out, shall we? We first notice a block of 3,000 of the AUG 8s going up for 39 cents. Pretty close to the offer. They were offered at 40 cents, so they got a penny better. That's about a 60 vol if you are intrigued by that, listeners. The stock was actually a little higher, 792, so they're wearing it on the stock right now. And no earnings in that cycle. The earnings are on September 12th, so they're not getting any earnings action for that juice. And then it looks like somebody liked it a lot because they came back roughly 2 hours later and did the same trade with the stock about 12 cents lower. They came back and looks like this time the calls were 30 at 35, and they said, we'll take 1,500 more for 34 cents. So 4,500 or so on the day trading from 34 to 39 cents out there. I don't know, Mr. Rock Lobster, 8 calls in designer brands. Are you loading up on some near-dated shoe love here in DBI, sir? You like these?
Well, you know what? This is DSW shoes, you said, right? I believe.
Yes, I did say they're the parent company of them. Yes.
Okay, so my wife, she doesn't like a lot of retail outlets, but she likes this one of all things. They are diving in hard on these things today, pre-earnings and everything. Although I have to say, sadly, I have to report, Mr. Longo, that they are not passing the day one test.
No,
they're 30-35 right now. All you can eat. So much like some of their shoe deals, again, this is one of those where it's like, I think it's a strong retail franchise. I have to say I like TJ Maxx better, but from like a bargain point of view, these don't look bad. But I have to say this is more of a stock I would write puts than buy calls in, if gun to my head. But I am going to add this to my list of year stocks at year lows, and see what might come of it. But I don't think it's an unreasonable, except you need a little lift prior to earnings. I mean, they're trying to buy the bottom here. I totally get it. So again, it's a relatively low price for a couple of weeks to expiration. So I don't hate it. I think it does have a shot, but it hasn't really seen like 9.5 since the earnings. So I mean, I think it has a shot, but I would probably rather sell like the 7 puts or 7.5 puts or something like that. And those are trading. The 7 puts are a dime. The 8 puts are 50 cents with a quarter of juice in them. I'd probably sell that and then wheel the stock on this. But they're reasonable. I think they're a reasonable shot if the stock can make a bit of a comeback.
Rock Lobster thinks those are reasonable. Let's see if he thinks these are reasonable. Let's go out to a name we talked about a few times of late. This is good old GSK, a.k.a. the cool new name of GlaxoSmithKline. They merged with Wellcome, I believe, over there in the old British pharma territory, trading $40.14, up about a quarter right now, or 0.7%. On the year, it's been a pretty decent year, up about 13%, nearly $5 for them, even though they are off their highs, which were about $46 set back in May. Again, if this name sounds familiar to you, we talked about them not too long ago. In fact, earlier this month, July 8th, we talked about some calls. Actually, that went up the week before. We paid them off. So they were from the week of the 1st. We paid them off the week of the 8th. Somebody came in. There was a big call palooza on the July 39 calls expiring on the 5th. They bought 4,000 of them for 60 cents. And then they bought 4,000 of them later in the day for 35 cents. So maybe not the best do if you're getting that much of a difference in prices there. But either way, they didn't really work out. They were expiring on the 5th. The stock closed that day, 38.84. So obviously below the 39 strike. So whatever you paid for them, it was too much. These were still open. They dropped somewhere in the neighborhood of $250,000 on that trade. And let's see. Looks like some folks are back today. Let's see if it's the same kind of paper, shall we? Saw a couple of prints. Maybe they're related. They went up very similar times. Well, let's find out, shall we? Let's go out there. First, we noticed a block of 5,000 of the AUG 39 puts, but these are expiring on the 2nd. So these are going out fairly soon. These are going out this week. So weekly AUG 39 puts going up pretty close to the bid for 60 cents. They went up tied against stock, 175,000 shares of the stock at $40.25. So doing these pretty much delta neutral. So selling puts in stock, that was the first lane. That went up as a spread. Sometimes the tied stuff also goes up marked as spread with the stock, which is a little bit confusing. I get it, listeners. Because we also did see a few minutes before that, about 3 minutes before that, somebody also came and traded 2,000 of the 41.5 calls expiring the same day. So August 2nd, looks like they bought them for around 49 cents. Again, the market was 40 at 50. So near lifting the offer on the calls. The stock was about unched at the same level as well. Worth noting, by the way, both of these trades are done through earnings. Earnings are on July 31st, so we'll know by the time Friday rolls around whether these trades paid off. Obviously, they expire on Friday as well. So it could be just unrelated earnings paper, Mr. Rock Lobster, somebody blasting away at puts in stock, and then a few minutes before that, scooping some calls. Again, 2,000 of the AUG 41 halves for about 49 cents. Or, I mean, it's not one-to-one size-wise, so that could be your first indication. Maybe it's not related, but it's oddly similar paper going up within a few minutes of each other. So in the past, that's often been related paper. What do you think, Mr. Rock Lobster? We got somebody just going for some upside fences for earnings in GSK. You got two people going for different ways to play the earnings game. What do you think?
Yeah, are they related or not? Are they kissing cousins? What are they? I have to say this. There's a lot of interest around this. What are they doing? I mean, I could see how you could go for the risk reversal action maybe on this, which would give you a bit of a credit. So, I don't is GSK really going to fall out of bed? I don't think this makes a bad risk reversal, although it would be pure speculation on it. But they are selling. I just feel like they're bringing in more put premium than they bought in calls. So that would make me think, it's probably not related, but maybe they just wanted the credit, or they'll buy the second chunk of calls later. But it definitely, both sides look pretty bullish, into earnings. So we'll see. I mean, the drug companies, if you look at what all the biotech indexes have just been going straight up lately. I mean, they're making, I believe, year highs just recently. So I think they're looking to capitalize on that.
Yeah, they're taking in a pretty hefty credit. Obviously, they're doing more size on the put leg, which is one maybe indication that perhaps it is unrelated. I mean, they're taking in around $300,000 worth of premium and only shelling out about $100,000 for the calls. So maybe they just wanted to pocket some juice. That could also be the case. Or it could be unrelated but similar in intention paper out there. It is earnings coming up, so it's not exactly unforeseeable that we would see two similar trades going up within a few minutes of each other. But either way, intriguing stuff. We'll have to come back to, I'm going to mark this, come back on Thursday, maybe when the Flowmaster's in town. Virtually on the show, of course. Come back. There we go. Make a note of that. We'll check out. We'll probably know by then. Yeah, because earnings are on Wednesday. So we'll know by then whether these calls are paying off or not, or the puts. And then let's get out of here on Informatica Inc., ticker symbol INFA, INFA. Don't see, looks like it's they say it's a Salesforce kind of competitor here. Trading 24.25, kind of unched today. On the year, it's been a good year, up 5.25, nearly 28%. So a nice run for them. They are off their highs, though. Their highs came nearly $40. That was back in April. So since April, they pretty much sold off from $40 back to 24. So kind of they're still up on the year, 27%, which shows you what a good year they had all the way through April. Yeah, a little more than doubled by the time April came around. So yeah, giving up a lot of that back to still up, but nowhere near as aggressively as they were back in April. So Informatica having a good start to the year, then kind of a rough second half here. Let's see what our Eye of Sauron found out here. Looks like going a little bit farther, going out to September, with the stock right around 24.25. Somebody traded 1,758 of the SEP 25s for $1.80, pretty close to the offer. They were offered at $1.85. This is a 54 vol. By the way, this is definitely earnings paper because they are popping off tomorrow after the bell. So yeah, you don't always think going out that long for earnings paper. I mean, paying $1.80, you could probably do that cheaper with some nearer dated contracts if that's what really intrigued you. But for whatever reason, they went out to September. Mr. Rock Lobster shelling out nearly $2. We'll know tomorrow if these calls are decent or not. What are your thoughts on these Informatica SEP 25s?
Informatica SEP 25s. I was just pulling them up here for a second. INFA. Well, they are going a little farther out in time, which I like. If you're going to be a call buyer, you want to give yourself a shot. I would say from a price point of view, pretty reasonable. It doesn't feel like 50 vol for this. Not crazy for a $25 stock. I have to say, not bad, but you will see the payoff by the end of the week for sure. So I think it is a not crazy shot into earnings, but it is still a shot into earnings.
Yeah, refreshing with everyone obsessed with 0-day paper going out to September. It seems like an eternity right now. You could also argue maybe if you were interested in earnings, you could probably do so cheaper. But intriguing stuff. It won't be done, obviously, by Thursday, but we'll know by Thursday's show whether these are trending in the right direction. Speaking of trending in the right direction, let's see if he is. Shall we, listeners? It is time for the strategy block.
It's time to dispense options, wit, wisdom, and education. It's time for the strategy block.
All right, listeners, it's the Monday episode. Time to home court with a little bit of the Uncleist of Mike's. He doesn't know anything about Deadpool or Wolverine, but he could talk some options. Mr. Uncle Mike, sir, what you got for us?
I want to talk about diversification in general, for options, for stocks, for whatever, you name it. It's a word that you hear a lot in the investment world, but it's very important to have an understanding of what it is and how you can actually use it to your advantage. So, for example, one of the things that I like to say or talk about is asset class diversification. Now, there are four major asset classes, and this is not including volatility, which I do believe should be an asset class, but it can be an asset class within these other four. There's four major asset classes: stocks, bonds, commodities, and real estate. So pretty much any investment that you have, you could categorize into one of those four. Do I believe volatility is an asset class? Yes, I do. But I believe it's an asset class that can be within all four of those. And that, my friends, is through options. So on here, I believe that there's a spot to use options in your portfolio and a spot to not use options in your portfolio. For example, some of my clients, they own their own home, and that house that they own it's such high value, especially in these markets, that it's become a very big part of their overall net worth. And because of that, they have such an exposure to real estate. I don't put those clients into any REITs or any real estate stocks or things like that. And not always, but I'm just giving kind of an example. And so on there, that's an asset class with which they have that does not have a hedge to it. But the clients are fine with that because they're not looking to sell the house for another 10 or 20 years anyway, most likely. And so from there, that would be an area to where volatility would not be an asset class. So with stocks, bonds, and commodities, there's options that exist within them to where you can use protective puts to hedge. You can sell covered calls. You can do that on pretty much anything that is within the stock, bond, or commodity world. Now, I shouldn't say anything, but there's a lot of things with which you can. You can't sell covered calls on a savings account. Don't try it. I've tried. It doesn't work. Anyway, so have the understanding that diversification is something to where just because you have large cap, mid cap, and small cap stocks doesn't mean you necessarily have a diversified portfolio. Now, there is a such thing as over diversification, in my opinion, but that's a topic for another day. Within diversification, let's say that you have certain stocks that move right alongside with the market. We're just talking about market diversification for right now. If you have stocks that move in lockstep with the market, then you kind of have the effect of diversification without diversification. If you have other stocks that kind of feed off of each other in certain ways to create certain things based upon past movement, you may have greater diversification than you think with a smaller number of stocks. It goes back to idiosyncratic risk. Now, what that means is that let's say that I own SPY 95%, and then 5% of my portfolio is in Apple, or let's do Tesla. If that's the case, then Tesla would represent all of the idiosyncratic risk within the portfolio because of the fact that that could move different than what the market as a whole is. And so let's say that the stock or stocks you have aren't necessarily that much different of movers than the market itself. That's where idiosyncratic risk can become less. And that's when selecting options for hedging can be a very, very, very fun thing, but it can also be a very, very profitable thing in terms of saving money on your hedge. So my strategy for today is to not only make sure that you are diversified amongst all four major asset classes, but also look at the style of diversification with which you have within the asset classes. Tomorrow night, we will be doing a webinar detailing this, and I would love to have you come. Feel free to follow me on Twitter to find out more information on the webinar. That is the strategy block for today.
All right, listeners, now it's time for us to keep on rolling and go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, listeners, welcome to Around the Block. Let's see how we're looking in the markets as we're wrapping up the show here. Dow back to unched on the day, pretty much slightly red. S&P up about 0.25%. NASDAQ up about 1/3%. So it seems like at least right now we're giving up some of that upside. But again, you know, all this stuff is fleeting, listeners. We could be up, down, flat by this time at the end of the session out here today as well. And VIX hanging out pretty close to where we kicked off the show, right around a 1640 as well. Speaking of VIX, our question of the week right now just went live right before showtime. It is VIX related. We said VXX, you may have heard of it, just went through another reverse split, was trading around $46 as of the time we posted this morning. So again, a reverse split. Does that make you more or less likely to trade VXX? You can give you four choices. Yes, you know, erosion for the win. I want to get in there. Higher price VXX makes it more enticing to me to play the erosion game. Or you could say no, you don't trade VXX or vol. Or maybe you trade vol, but you prefer other products. Certainly a viable option. Or, hey, you're still in. You never stop trading it. Let's see. Let's go around. Let's look really quickly. We'll get everyone's thoughts here on what they're watching while I find what the up-to-the-minute results are. Mr. Rock Lobster, we'll start with you. What are you keeping an eye on for the rest of this week? We already asked you on Friday on vol views. You said the reverse split does make you more enticed by VXX, but what do you keep an eye on until the Thursday show?
Yeah, I mean, I'd like to see the roll yield turn, negative again for VXX. Right now, it's still in the positive territory, I believe. So there's not a rush to jump into it. Yeah, it's still rolling up a little bit. So you can wait. But we have the Fed talks on Wednesday, 2:00. You know, what are they going to do? They're going to keep interest rates steady. And we've got probably big tech is at all-time high prices, although, at the nadir, we were down, 10% from the high in the Qs. We were 500, got down to 450, I believe, really close to 450 on the Q. So are the earnings good enough to keep the stocks going? That is the question. And so far, the market has said negative. The earnings have not been good enough to keep the stock prices where they are. So we'll see. My guess is, some will be good, some will be bad, but I think 500 feels like, to me right now, I hate to call it top, but probably the top for the year for the Q is 500, unless NVIDIA pulls a rabbit out of its hat.
We've seen the top for the year, says the Rock Lobster. Send your hate mail, Andrew, at option
in the Q. In
the Q. Top for the year in the Q. So SPY is going to keep rallying, but Q going into the toilet. That's what the Rock Lobster said. All right. Check him out over there in the land of the pit. Mr. Uncle Mike, same question for you. So what are you keeping an eye on until the Thursday episode, sir?
I mean, just watching to see how the market reacts. The thing that I'm keeping an eye on, that you probably know I'm keeping an eye on, that I want to see how it reacts going into the Fed, will be silver, to see if we are going to catch a bid in some way going into the Fed.
All right, everybody, that music means we've come to the end of another epic journey through the world of options. Luckily for you, if you want more journey in your day, stay tuned. If you're hanging out in the pro, I'll be back in a little bit to break down the wild, woolly world of crypto derivatives with a little bit of the old crypto rundown. Should be a fun time. But before we do that, let's go around the horn really quickly. Let me pay off how our poll's looking right now in the early blush. 57.1% of you saying yes. The reverse split for VXX is making you more intrigued. I'm with the Rock Lobster. You definitely have to wait until that erosion game kicks in. You don't want to be ice skating uphill, as they say. So wait for that to kick in. The rest of you, somewhere around 14% each for all the other choices we have in there. Again, just went live at Options, the place to go to make your voice heard. And Mr. Rock Lobster, where should they go if they want more good goodies in their lives?
Go to optionpit.com, 888-TRADE-01, 10% off anything. My weekly profit cycle's doing well. All my products are doing well, to be quite honest. So are Mark's and Leisha's. Yeah, come on in. We had a great live time in Chicago last week, and we will do it again next year.
Optionpit.com, the place to go. Mr. Uncle Mike, where should they go if they want some webinar goodies?
Check me out on Twitter. Give me a follow at Mike Tosaw, Tosaw. If you want to have a conversation with me, go to my website, stcharleswealth.com. We'd love to have a conversation with any and all of our listeners, all at once for that matter. No, just kidding. But schedule a time. We'd love to have a conversation with you if you're looking for a financial advisor.
There you go. stcharleswealth.com. You know where to go to kick the tires and light the fires on your options trading. Public.com, the place to go. Check out that rebate. And also, while you're there, kick the tires and light the fires on the rest of their options offerings. And let them know what you heard about them from us. It goes a long way towards keeping the support for the show flowing. They're having a good time. They're loving what you folks are telling them over there. Also, they love your feedback on the platform, what you like, what you'd like to see added or changed. Again, it's a new platform, so they want to hear from you folks. That's why they're on a show like this. Public.com, the place to go to learn more. That's going to do it for us on the option block today. Back again in a little bit for the crypto rundown, breaking down the madness. How are these new ETH ETFs? How are they shaking up the world of crypto and derivatives from a vol and skew and trading perspective? Let's find out, shall we, in a little bit. Then back again tomorrow. If you're hanging out in the pro, it's a good time to be in it. You get live access to the advisors option. I'll be joined by our buddy, Mr. Matt from Orats. And who else? Got to tune in to find out tomorrow. You can get that live, of course, on the pro tomorrow. And then after that, our buddy, the once future and present Dr. Vix, joining us to tackle all of your questions in a pro Q&A session. Those are always popular whenever Russell joins us, so get your questions in now. You know where to go to become a part of that, theoptionsinsider.com/pro. Wednesday, of course, you get your taste of Options Boot Camp, and then we're back again on Thursday with the Flowmaster in tow. Another episode of the Option Block. Stay safe out there, everybody.
Most options trading platforms are commission-free, and there are some that don't charge per contract fees. Public.com goes a step further. When you trade options on public, there are no commissions, no per-contract fees, and you get a rebate of up to 18 cents per contract traded. That means it costs less than $0 per transaction. In other words, instead of paying to place options trades, you literally earn money, and that money can add up fast. If you trade 1,000 option contracts on public, you'll earn up to $180 in rebates. 10,000 contracts? Up to almost $1,200. It's pretty obvious why NerdWallet recently gave options trading on public 5 out of 5 stars. Because public really stands out for the cost of its options trades. Their words, not ours. If you want to start paying less than $0 to trade options, check out public.com and get a rebate of up to 18 cents per contract traded. Paid for by Public Investing. Options not suitable for all investors and carry significant risk. Full disclosures in podcast description. U.S. members only. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.